Okay, great. Well, welcome to the TPG Leadership Series, the digital transformation show. We have some amazing guests lined up for you, and we're really excited to have everyone here. We've had a huge amount of interest in this topic of digital transformation. I think there's a lot of people who will not only be here with us today, but also watching the recording. And also to all our Facebook fans there as we stream live on Facebook this session as well. The session will also be, a recording will be available on tpgleadership.com in the video section. And so with no further ado, let me introduce some of our very, very special guests. So one of our guests today is a true digital guru, someone who has held senior positions with some of the top brands globally. He's held a position such as Global Digital CIO for HSBC. He's been a senior director with Microsoft. He has also been an executive general manager and CIO for National Australia Bank, as well as a director and member of the board of Amazon Web Services, Amazon being one of the largest tech companies in the world. We're really excited to have him. Currently, he is the Group Chief Technology Officer at First Abu Dhabi Bank. Please welcome Yuri Misnik.
Hi, Shane. Great to be here.
Thanks for coming. So for you guys in the digital space, we can you can clap by you have a little clap thing if you're muted. So our next guest, we're really excited to have, and someone who has a lot of banking experience. She has previous experience at Standard Chartered Bank, as well as Housing Bank for Trade and Finance in Jordan. She is currently the Chief Digital Officer at Capital Bank of Jordan, and she is about to become, I don't know if I'm allowed to announce this, but I'm gonna let the cat out of the bag. I'm not supposed to tell you this, but she's going to be the Chief Executive Officer of the new neobank that Capital Bank of Jordan will launch shortly. Please welcome Zein Malhas to our panel.
Thank you, Shane. Really excited to be with you, everyone.
That's great. That's great. We're really excited for you, and congratulations. So this is such a fast-moving segment that we can't even keep your title. It's shifting so quickly. So. Congratulations on what's to come and what's on the horizon for you. I'd like to also introduce one of our co-hosts here, a gentleman who brings a flavor. You know, we can't have all tech gurus. We also need someone who can speak to the human element of our business. And often we forget it's human beings that make actually get the results, not just the technologies, the products, and the services. He's a man who hails from the big island of Australia. He has always wanted to have an international career, and he's held divisional HR roles for companies we might have heard of, such as Procter & Gamble, where he was a divisional HR head for Asia, running the prestige care business, looking over thousands and thousands of employees, has a lot of leadership, selection, and management experience, and then was a divisional global CHRO for Maersk Shipping, one of the top shipping companies in the world. Again, a very global role, looking over a multitude of countries and businesses before coming in to one of the biggest banks in the Middle East, where he was the Group Chief Human Resource Officer for First Abu Dhabi Bank. And then he has had a pull on his heartstrings and has become a humanitarian, and has joined Plastic Bank as their Global Chief Human Resource Officer, and is trying to make the world a better place and stopping using all that plastic and garbage. Please welcome Mr. Pete Baker to our panel.
Thank you very much, Shane. It's great to be here, great to be with everyone. I am working in a slightly different industry at the moment, but still enjoying the concept of digital transformation, which we'll be talking about today. So it's absolutely delighted to be here and having such distinguished guests of Yuri and Zein. Thank you.
Marvelous.
Also, I forgot to mention, Peter is actually a TV star. If anyone has caught him on the famous show, one of Dubai's favorite shows, Bedazzled, that plays every Friday night at 7 p.m. He is on the career tip Time, which he gives you career tips, and he also has an amazing co-host on that show, which
exactly right. Let's just say I have a co-star who certainly has apparently a better accent than I do, Shane, and I love the career tip time on Friday evenings on Bedazzled on B4U Plus.
You're becoming
I'm
superstar.
actually, his co-star, Shane Phillips. So if you're wondering, if you haven't heard of me, I'm the CEO of the Phillips Group. I've been running executive search. My company was founded in 1984 by my dad. We've been placing CEOs and board members for the last 36 years. And we just placed the CEO of Tim Hortons for Middle East. That's also not supposed to be let out of the bag, but that one just slipped out. So, so really excited to bring a bit of a leadership angle to the dialogue today. And of course, we can't have a tech show with our own tech resident guest, a man who has had his metals hardened in the high-paced environment of Silicon Valley itself, a man who has worked for Sun Microsoft Systems, who has started .com businesses in Silicon Valley before moving into one of the biggest banks in the world, Bank of America, where he was a VP of IT and spearheaded the digital transformation for several of the divisions over there. And then, of course, being of Arabic roots, came back to join the excitement that's happening now in the Middle East, where he was the chief information officer for the Bank of Jordan. And then seeing the dramatic change and opportunity that digital transformation is bringing to the region, he has founded Digital Analytica, where he is the founder and CEO, and continues to service clients across the region and actually globally. Still actually has Bank of America as one of his clients. I don't know if he wants me to mention that or not. I'm letting all the stuff out of the bag. I'm letting all the secrets out today, folks.
That's fine.
That's okay. Okay.
Yeah.
So he has a lot of experience. Please welcome our very own Nasser Zagha.
Thank you. Thank you, Shane. Thank you, everyone. Thanks for the introduction. That's really nice.
Well, it's great to have you. And so today we're talking about a very sensitive topic, is how do you keep this digital transformation alive, what's moving so quickly, but at the same time, you know, stay in line with corporate governance and make sure that we don't overextend ourselves, taking on too much risk or get ourselves into hot water as the technology runs away with us. So I'll turn it over to Nasser to start firing the slings and arrows at our panel today.
Yep.
So take it away, Nasser.
Great. Well, nice introduction, Shane. I mean, basically, you're very much renowned yourself. I think, you know, you all know Shane very well from the Phillips Group, so was great to be in this session. Again, Zein and Yuri, nice to have you over here. Of course, Pete, you're part of the team. So again, nice to have you with us. So the thing is, when we talk about digital transformation, recently, most companies have been investing heavily in digital transformation. We've noticed that the pandemic has accelerated the trend. But at the same time, we are noticing that regulators are enforcing strict rules and regulations for the BFSI sector, so the banking, insurance, you know, the financial sector, and other industries as well. So basically, my question to our guests is the following, and I'm going to start with the lady first, Zein, then we'll go to Yuri after that. The question is, do you believe that regulatory rules and regulations are impeding digital transformation in general, in firms and BFSI, you know, just big corporations to talk about?
Thank you, Nasser. Well, the simple answer is yes, but that's if we want to be pessimistic and we want to find reasons for us to hinder our journeys. But the fact of the matter is that regulators are trying to balance between protecting their countries, their domains, but at the same time trying to ride the wave of digital transformation. I wouldn't, not to move away from the core topic of today's session, which is around regulation and governance, but this actually, from my personal experience, comes low on the reasons that are actually today hindering digital transformation, which are more of enterprise agility, which are more of cultural change, process re-engineering, and process improvement. So I wouldn't say this is top of the list when it comes to actually reasons to impede digital transformation, and there are always ways to work around this. So regulators are actually really trying very hard to become more flexible, to try to tweak the regulations to meet digital needs. I, for one, can tell you from my experience in both Jordan and Iraq that the central banks in both countries are working very hard and very close with the players in the market. They are constantly issuing white papers and draft regulations, and actually getting feedback from the market in order to get insights on how they can do things differently. So actually, regulators are no longer the police, for the lack of a better word. They are now more of partners. They have changed their role and adapted it towards what needs to be done in order to facilitate digital transformation.
You jumped right into my third question, actually. So basically, I see your point. So basically, you're stating that it's okay to have regulators, as long as they don't impede our overall processes and basically not to hurt the company in a negative way from that aspect. So I just want to, see Yuri's point of view and that part, and basically I would like to Pete later on to give us his thoughts on it as well. Yuri, go ahead, please.
Thanks. I think generally I agree with absolutely what Zain is saying. I think the climate, the regulatory climate is changing, maybe a bit slower for everyone's liking, but regulations will not disappear. We know this. We know that financial services is such a critical, for example, financial fintech, finserv, insurtech. It's so critical to everyone's well-being and to the health of the economy and to the well-being of the states and nation that we'll always have somebody sitting in the center who would be a regulator, an observer, and to some degree an enforcer of some rules. And I think there are a few things which is important if we want to do digital fast. First of all, we need to make sure that the regulator maintains the level playing field, right? So especially as you're having sort of the fintechs, the new enters into the market who actually want to play differently, or play digitally from the beginning. We also need to make sure that some sort of standards exist, which maintains all of us to the same level of responsibility. That's one thing. The second thing is, I really like what Zain said about, it's always an excuse. It's very often an excuse. And
I like that.
First of all, when you educate the regulators in terms of what they're trying to do, and I worked with regulators in the UK, I worked with regulators in Australia, here with Central Bank of UAE, we've almost never heard the word no. We've always, if you work with them, if you explain to them what you're trying to do, how you're trying to do, and you're reasonable and sensible, there's always a way to go ahead. One big thing from my perspective is the regulators need to start thinking very actively and more in depth of the cloud adoption, because this is a massive enabler for digital, for agility, for pace. And we're very lucky in the UAE. We'll have 2 cloud providers. Microsoft's already here. Amazon is coming. True. That's really great.
Yeah.
So that's a big enabler. And the last thing I want to mention on this one is the way to deal with this regulatory pressures is to start applying digital transformation to your regulatory environment as well. That means when you're in a bank, think about policies, think about controls, think about some governance. Use technology to solve these problems. Treat it as a digital product. Treat controls, treat audits, treat regulatory elements as a digital product. That means automate it, make it so straight through, make it fully manageable, and that will remove the problem.
Digitizing basically the processes or basically whatever the regulators are requesting, just making
digitizing the controls, right? This is a big thing. If you look at any bank, any big bank, a huge number of controls you're running, huge number of processes around compliance you're running, it's manual. So digitizing them effectively removes this barrier for transformation.
I like what you're saying. I'm going to come back to it actually in a minute. I would like to hear from Pete, his take on it. He worked in the banking industry. He's seen the regulators before. He's been, heading basically the HR before, the human resources. So probably I just want to get his insight. What's your take on it, Pete?
Yeah, my insight is actually that the internal gatekeepers are a much bigger problem than necessarily the regulators. And it's actually, there's a lot of internal gatekeepers in banks, and then even in the social enterprise that I'm now in, where we also have regulators. It seems very convenient for internal gatekeepers, people in risk or compliance, for whom it's just too easy to put up the red card and say, no, the regulator will never agree to that, rather than engaging in what the solution might be and in helping to solve the problem. So I think what you see in digital transformation is the best leaders really set a vision that is a multifunctional vision, and they give, let's call it the gatekeeper functions, like risk, like compliance, like audit, they give them a role to play in the process, rather than seeing them as separate from and gatekeepers of the process. So I guess that I'd be interested in, I guess, Zein and Yuri, as enterprise leaders, what have you seen works in terms of really enrolling those gatekeeper functions into the vision of digital transformation, so they're not just holding up the red card and saying stop, but they're actually working with you to find solutions and then subsequently influence the regulators.
Marvelous. I like your take on it. I know for sure that Chain thinks about it from a financial perspective right now, but we're going to come back to that later on. And the next thing, here it is. We've talked about regulators, and how they affect the overall, processes within the corporations. But yesterday I went through an interesting article in the News Tribune, and the title of it was "How Government Regulation Kills Innovation." So basically, they went way against you guys in the way you're thinking, and the article was stating that basically government regulators, they do kill innovation, and they in corporations. So basically they went against, what we hear from the, I would say SMEs, and they said, okay, no, you guys are killing, companies, you're killing banks, and that's what's happening. Okay, what about innovation? Is it being hindered and affected by such rules and regulations? And I want to start with Zein again. So basically we'll move in that direction, and we'll ask Yuri as well, and then Pete. Please go ahead, Zein.
Well, Nasser, I don't think we can really isolate innovation from digital transformation. The way I see it, they are actually hand in hand, right? The one leads to the other. You might consider one as a prerequisite to the other or otherwise, but I mean, it's one theme, right? It's the theme of you deciding to venture into the future of where the financial services industry is heading, into digitization, into basically making use and leveraging technology in a way that would streamline processes. And of course, it's not just about front end, but it's also about the back end. So as Yuri mentioned, or sorry, he didn't mention it here, but yeah, the way you go into the whole end-to-end process, and the focus on straight-through processing and all of that is all part of the innovation and digital transformation space. So having said that, I would say my response to the first question would also apply to this one. Actually, I have seen regulators that are creating sandboxes where they open it up for fintechs to run proofs of concept. We ourselves as a bank have been receiving letters from the regulator introducing certain fintechs and urging us to try to run as proof of concept with them. So even on the innovation front, why would a regulator hinder your ability to innovate? And again, as Yuri mentioned, we've never come across a situation where they simply say no. They would try to find ways to make your innovative ideas more workable, more in line with basically risk frameworks and risks models that they worry about in order to protect the whole ecosystem.
All right, great. Yuri, what's your take on that?
It's an interesting topic, and I don't think that government or laws or rules necessarily, they make innovation sometimes a bit harder. I actually think they make it a bit more responsible, because you are working in an environment, you're working in a place where effectively mistakes might cause a very, very big effects, right? People can lose their money, people can lose their, life savings, and people can lose their trust in the financial system, and that effectively has a massive ripple effect across the economy, right? So when the rules and the governments are created, I mean, sometimes yes, you would go and discuss with the regulator if is the new regulation right, but essentially what Zein is talking is absolutely right. Even in UAE right now, every time there is any regulation or any law which comes up is impacting digital, we have a consultation program. We talk to central bank. They talk to us. Actually, they want to hear what problems we will see by actually adopting it. So there's no evil government sitting in the center trying to stop any innovation. I think, from my perspective, the biggest stoppers of the innovation is actually this people with red cards, which Pete was talking about a bit early, where they see themselves as protectors of the status quo, and people who would say, okay, we've always done it this way. Customers need it, or it makes my life harder, so why would I support it?
The comfort zone, yeah.
Exactly. And sort of, in many cases, people just protect themselves by, being stubborn with the, big red card sitting there. And the only way I sort of maybe talking about the question which Peter was talking about, like how do you make them work together, is that first of all, it can only be done from the top. And the voice from the CEO downwards needs to be absolutely consistent about what and where we want to do. Sure. And the second thing, I do believe that the only way to solve this problem, to remove this impediments to innovation, to change, to transformation, you can call it whatever word, is to create, cross-functional teams with shared goals and shared KPIs, and make sure that the risk people are not rewarded on just keeping the bank 100% safe, but they're also rewarded in driving the new things to the customers. And if you create this culture, and of course there needs to be a balance. No one is suggesting some Wild West. If you create this balance, then I actually don't think that the regulatory, this regulatory constraints will be we have so many things to innovate. We have so many things which financial system hasn't done yet, compared to retail, compared to social, compared to internet. So the space is so big. It's very, very, I think not fair to say, because of the, some evil controls in the center, I'm not allowed to build something new.
Yep. Yeah. Well, basically, Pete, what's your take on that? I mean, basically, here it is. I mean, basically, I think we've got unanimous, thinking about, regulators and how they regulate things and enforce their their frameworks, or basically their requirements and so forth. I would like to hear from you.
Yeah, but I would probably echo what Yuri and Zein have said. Governments and regulators are not the problem here. The problem is internal. I think we're lucky to some degree in the last year or so with COVID that has been a catalyst for change, right? I mean, one of my favorite stories is here in the Middle East around banking is, well, our consumers simply love to go into branches and line up and deal with cash and see manual forms, and they won't embrace banking on their phone. And so therefore we need to operate the way our consumers want to operate, right? We all heard that for years and years and years, that there was something special about this region, that people liked that personal touch and the physical touching of documents. Well, guess what? COVID comes, the branches all closed down, and surprise, surprise, consumers rapidly adopt the kind of tools that Yuri and Zein have been pushing for years. And guess what? They're not going back. And so I think the best leaders have used that as a catalyst to really kind of create even more momentum for digitalization. And you see most institutions here in the Middle East and all around the world have digitalized to the point that really it's absolutely redundant on a consumer to go into a branch. And consumers don't want to. Who wants to go in and stand up and wait for half an hour to be served when you can do it on your phone? So that all of that internal resistance has gone, and I think we're really cleared the decks for a fantastic transformation here in the region.
Yeah, I mean, basically, even we've witnessed right now, notarization is being done remote. I mean, basically, that's kind of interesting when we look into such transaction where basically it requires, the authenticity of the signature itself, and making sure that basically there are witnesses and so forth. And yet they have like huddle rooms where basically they can have multiple individuals who can witness the notarization of a legal document, which basically empowers someone else to do something with that document. So very interesting, I would say, move into that direction. I think we were right into that. We're seeing that anonymous, just the move is going directly into basically digitization as being enforced in one way or another. The thing is, many SMEs, kind of like yourselves, guys, subject matter experts, they suggest that fintechs are thriving because many of them are not affected by the local regulators. So they are able to innovate and digitize with ease. I want to turn the table around. That's what I want to do on this call. And that's why basically this came to my mind. What's your thoughts about this part, when we talk about fintechs and regulators, and they're not affected by the regulators. In fact, now, many of the fintechs, they don't even report the regulators at all. So Zein, what you're thinking about that part?
I actually like the way you brought this to the table. Thinking about it from the flip side and looking at fintechs and why they're thriving, is it really because they're not regulated? I would say no, because regulators are not completely blindsided and not looking at these fintechs and just letting them be. First of all, fintechs will never reach to a point where they can provide full-fledged banking services. They are providing bits and pieces of what banks are doing. And here it takes us to a discussion for a different day of whether banks should partner with fintechs or should compete with fintechs or should buy fintechs. That's a different story. But they are not as comprehensive as banks. And to Yuri's point on the importance of protecting people and protecting and the sensitivity of this industry, fintechs are always taking a single stream. So you see fintechs
actually, we're going to be talking about mergers and acquisitions and innovation. So basically, that's going to be one of our, coming sessions. So I love what you're talking about. Yeah,
it's a key topic. I believe so. So basically, for fintechs, you see fintechs in payments, you see fintechs in cards. So they are taking specific streams, and they will never be completely introducing their products and their services and integrating with banks without banks' overall supervision and without the regulators' supervision. In some countries, we have seen open banking regulations that the regulators are also issuing, which even facilitates it for fintechs. But the dependency ultimately is on banks. So on one hand, this to me is a proof that no, they are thriving not because of regulations being softer, but if this brings us to another topic, which is what are key success factors of digital transformation, I believe fintechs are in a better position to have those. They start small. We can discuss this later, but there are many factors that they have, and I wouldn't add regulations to those that are giving them a head start and allowing them to actually compete with banks.
Marvelous. Yuri, I would love to hear from you.
I would actually slightly disagree with Zain in terms of, I think fintechs are being regulated, right? It's the matter of scale. And if you look at, somehow we're not thinking of Revolut or Monzo or Starling or I don't know, TransferWise or Wise as a fintech, but they are fintechs. They've been grown into the big these big machines, Robinhood, right? You think about this. the point, and I think it's a really good point, I think fintechs can move much faster and start smaller, because in many cases they can benefit from the sandboxes, the small, innovation playgrounds like which regulators are setting up. Like if you think about ADGM in Abu Dhabi or DIFC in Dubai, where you could actually set up something small, regulated differently. And that's great. And that's something which we need in a large institutions. I mean, I would love to go and do these things. And sometimes, unfortunately, the regulators look at me as a bank, regardless of what I do, right? Even if I start launching a small service for, 100 customers or 200 customers, they still want me to apply all this mature control sets. But once the fintech grow and once they scale, they eventually run into the same laws, regulations, compliance elements, which everyone else does. And if they're not prepared, if they are not thinking about they will actually fall down into the same category of the legacy banks, right? They will spend more and more money and more time on dealing with compliance and dealing with controls. But if they're good, and if they're thinking about this from the beginning, if they apply this technology's thinking to controls, they apply technology to compliance, then they can scale up. So I think it's a matter of, and I also do believe that fintechs will take full end-to-end services for customers, whether it's manufacturing services in the banking space, whether it's distribution services like channels and the last mile type of thing, sort of the branding, the engagement platform. They will. We just haven't seen it yet. We've seen elements, and Zein said, right, we've seen elements and building blocks. And in this case, when you look at the particular fintechs, the risks for them, for the ecosystem is not very big. But once you start growing in them, let's say like that, if, right now, Monzo in the UK, which is a digital bank, it runs 2 million, 3 million, 5 million customers. It's quite a big number. And they hold deposits and they have sort of prepaid, etc. If it fails or you've been hacked, or if it fails anti-money laundering regulation, it'll be a massive impact. So they are controlled. And again, they just better at using this, startup modes with a smaller set of customers. And they're also much, much, much better with the perspective of legacy, complex integrations, complex systems, and maybe complex processes, which they haven't invented yet in their own organizations.
I see your point. I like that point. Shane, you want to jump in?
Yeah, great. I mean, I've heard this word innovation through the whole conversation. And do we really feel, I mean, as well as you as professionals looking at the banking sector, do you really feel that the banking sector is innovative? Are they not implementing technology that's been around for 10 years? And when you walk across the street from bank to bank, everybody's like, oh, we're launching an SME banking digital platform. Oh, we're launching it. And, it's the exact same product, the exact same story at every single brand. And if you look on the flip side, you don't talk to a single, I have not heard, that maybe it's just me, I have not heard a single customer say, wow, I'm banking with XYZ Bank and it's so amazing. They gave me this amazing experience. It's almost like the technology is going up and the customer experience is going down. I get to talk to Emirates NBD. I have Ava, the automated assistant. It's like you're stuck in the airport, your credit card's not working. And it's like, did you say you would like a mortgage? No, I need my credit card to work. Would you like auto loans? And it's like hell on earth. Meanwhile, on the other end of the side, the CEO and the CIO is going, well, we're so innovative. You can have your mortgage fully dispersed within 24 hours, which is a lie because that never happens no matter where you go when you apply for, if anyone's applied for a mortgage lately, doesn't happen at all. So it's like, what's really going on? Let's call a spade a spade. Is this really an innovative market? First of all, and secondly, who's talking to the customer?
As you can tell, Shane is very passionate about this topic.
I love the passion. I love the passion.
So, Zein, you're responsible for driving this innovation. How does it make you feel to have a successful person responding with such dissatisfaction?
Can I just jump in? I actually think Shane is absolutely right and it's spot on. And I've been talking about this for ages. Is we are not innovating in banking. All these digital wonderful things, yes, getting the experience better, but can any of you name one or two massive innovation which disrupted the financial services space? Disrupted like Amazon disrupted retail, or disrupted like, I know, 3D printing is disrupting manufacturing right now. We still sell the same products packaged in the same way, called credit cards, personal loans, current accounts, which is completely artificial constructs invented to be convenient for bankers. Because you as a customer don't need to have 5 cards in your wallet. You don't need to think about, am I have a personal loan or a credit card or a current account or a savings account? This is all works because our backend systems operate in this way, and our accounting principle operates in this way. This is not because you as a customer want to have it in this way. So I absolutely agree. What we're doing sort of icing on the cake and sort of polishing this experience, absolutely. And it needs to be much better. And by the way, the example which you brought up could be very meaningfully solved with the modern technology, when you can press the button and my credit card is being fixed, or somebody talks to me about it. But it's not innovation. It's a basic customer experience which we need to fix first.
Yes, I happen to agree with Yuri fully, and I want to build on something he said on products. So what we've been doing for ages is not only are we just looking at these same products and just moving around them, but we're also splitting them into other products that we are naming differently. So we continue to have these sub-products that are all eventually the same thing, right? So we complicate our customers' life. We're making it even more of, we're putting the name of innovation in front of all of this complexity, and the customer is being very, very far from what we're doing, although we all claim to be customer-centric. The fact of the matter is we're not. And the very, very basic example of that, or proof of that, is that even our language is never really close to the customer. I can give you a really funny example from my personal experience. When I talk to my family, my brother, my sister, who are technically from the same background, they are financially literate, at least to some extent, they're not bankers, but they don't even know the difference between a credit card and a debit card. But here we are as banks, sending SMS notifications, creating all of these campaigns on credit cards and cashback and all of that, and how you can digitize and how you can now use your card using contactless technology, which we're claiming to be innovation and making their lives easier as customers. But at the end of the day, we're not even thinking about the language we use when we communicate with customers. That is the essence, or I believe, is at core when it comes to fintechs and why they are succeeding, because the way they're doing it is as startups, the way they are doing it is as far away as possible from banking, from the way we think as bankers. And being a banker myself all my career, it's actually a challenge for me as well, having gone down the career of digital and innovation and digital banking and all of that. I also need to develop a new skill set to think differently, to think very far away from banking as possible.
I think you made like a very interesting point where, you said, hey, we haven't had that disruption yet, like Amazon hit retail or Airbnb hit the hospitality market. And so obviously having the experience and the vantage point that, this panel has, where is that disruption going to come from? When is that disruption going to come? And what will that disruption look like? Some, if you go to the libertarian extreme radical, they're calling for a collapse of the traditional banking system. Other people, obviously, not so radical. What does that look like? Where does it come from? What are your predictions when you look out on that horizon?
I'll jump in because I don't actually have an answer, so I'll leave it to Yuri. But I think one thing we thought would be actually disrupting the banking sector is cryptocurrency. We have not seen, I personally have not seen the light at the end of the tunnel yet. But when we talk about Libra being like the currency of Facebook and transfers becoming as seamless as actually sending a WhatsApp message, that would have been the Airbnb of hospitality and the Amazon of e-commerce, in my view. But Other than that, I cannot think personally of something that disruptive. Maybe down the road we would have an idea. I personally cannot think of anything as disruptive.
I think that's absolutely right. Payments is now changing. It's changing much, but it's also still changing on the surface because the wallets are being a great idea of a stored value, but it's sort of adding another mechanism of moving money between A and B, which is great, which is a bit more convenient, but it's still moving money. So I think there's more evolution in payments rather than the disruption in payments. And that's a great story. I do believe that Libra was a great idea, and I think Facebook is still working on it. So maybe we'll see more of that sort of universal digital currency. And the question here is not digital currency. The question is embedding the financial services into our everyday life. So I actually don't mind whether they're going to be done with Libra or with through a traditional mechanism behind the scenes. But effectively, making the financial services seamless, I think, is super important. And the second thing, which I do, two other things I want to mention. One is, second one, I believe that banks need to change from being a provider of transactional services to becoming your sort of financial behavior educator / helpers, right? Which become engaged in my everyday life from the perspective of how do I spend my money better, how I deal with my money better, how I'd be more responsible with my money. That's the big thing, which requires, this will be this big disruption in thinking, right? And I think that's something which we really will need to figure out how to do. And the last bit, I still go back to this original point. I think the real disruption will come up when we will truly, and I've already seen a few startups in the US starting to do that, when we truly get away from the concept of banking products as we have them today and create something to replace them, right? I think I was talking to Pete about it before, right? Imagine you have a phone and imagine you go into the shop and you pay. And you don't think, are you paying from your savings account or credit card? Because the bank knows your credit worthiness. It knows how much money you have and you just pay. And then later, the bank allocates this spend from the place which is most convenient and aligned with your goals, right? That would be a disruptor. That would be something which would dramatically change the experience, the behaviors, etc. But it requires a massive shift of trust, of risk appetite, and effectively of the way we do financial services.
So when you look out, maybe we can take a couple questions from the audience now, unless Nasser, you have something you want to jump in, or Pete, you want to jump in.
I'm fine from my side. If you want to, I'll leave it to Pete if you got anything to add.
So we have a question here. What's your view on the hottest topics for payments today? Buy now, pay later, faster payments, exporter, from Mr. Thomas. What's your take on the latest payment apps and structures from your side?
Jen, do you want to go for it, or?
Please go ahead, Yuri.
I think sort of we definitely see the proliferation of wallets and proliferations, and the economics of the payments is getting very different. The margins and the revenues of the payment services become much smaller, and it probably started with TransferWise or Wise when the whole cross-border currency. Now everyone is playing in this cross-border corridors, especially in the Middle East with subcontinent and everything else. So we definitely see wallets. We definitely see buy now, pay later. I think is still coming to the region. If you compare it with what's happening in Australia or the US, where it's so at the moment we still have a very basic things when effectively the bank funds it and sponsors it. I think it will go to the place where the merchants become paying for it the same way they're currently paying for credit cards, where this installment model will start developing. And also, I do believe that what we're seeing now is that more and more partnerships in the payment space between non-banking, non-financial services companies and financial services companies, especially retailers, when you do things like POS lending, when you do some alignment of your payments data with your supply chain data and start doing some supply chain finance work, etc. So payments now becomes almost like a commodity, but it pumps a lot of data which is needed for other services to work. And we start seeing some interesting use cases popping up from that in the promotion space, in the lending space, micro lending space, especially, et cetera, et cetera. So that's sort of probably big things which I see.
I would add maybe just 3 themes that we see around payments. One is transparency. 2 is low cost, as Yuri mentioned. And the third being easier access to finance, in the sense that we're no longer looking at secured means of financing. So now financing and payments are, like Yuri mentioned, POS lending, supply chain finance are now, it's like a commodity with the financing being integrated into it. So, and most importantly is on the front of transparency, because a key issue that we all face is when we make this transfer and then it just goes into that black hole. And we have this anxiety until we call up the beneficiary and ask them, have you received my funds or not? So that's, I believe, are the 3 main themes disrupting payments.
Let me add one other thing is sort of, I think what we'll also be seeing more and more, and if you think about sort of this new payments initiatives which are happening in UAE, the NPP thing which happened in Australia, I think UK is starting the thing the same way. It's starting becoming more of, I'm just playing on what Zain said, it's services like request for payments, e-invoicing, enhanced protocols between buyer and seller, which allows you to sort of essentially do some interesting stuff. That will be a very, very, I think that will move. That will happen. That will happen next 2-3 years. So when effectively you would not just be able to say, okay, I want to transfer money to Pete for the dinner when we shared, but I also say I can request money, or I can request a payment from my supplier with the link to the invoice, with the link to some accounting system. It becomes part of the ecosystem rather than just being a pipe for moving money.
As we kind of look forward and being in the boardroom, you're seeing a huge amount of CapEx going into these digital agendas. In fact, in the US, I think they're saying 12.8 billion has been invested just in fintechs in the first quarter of 2021. I know here in the Middle East, working with a lot of our clients, they're investing in upskilling their CIOs, their CTOs. You have head of applications now becomes a really pivotal role as well. And everybody rolling out the same services. Are we not heading into the perfect storm where on one hand, you have this huge supply being built of fintechs and digital services, banking services that are being expanded both vertically and horizontally. And at the same time, not everybody can be a winner. Not everybody can, there's only so much market share to go around. And then the second part of that, which is also very fascinating from my perspective, is in effect, you're not launching a digital banking or a fintech, in my opinion. You're launching an e-commerce business. You're launching an online business. And e-commerce business needs digital marketing, online marketing, branding, which banks have notoriously been the worst at. In fact, a lot of banks don't even have a chief marketing officer, let alone chief digital officer. Seriously, a lot of banks, they just have a head of corporate comms or a head of investor relations. So it's the whole department is like non-existent. And they're running into this and we're like, hello, do you guys not realize that, when you look at a company like, what was that, Honeybee or whatever, the crowdsourcing bank, was it called Honeybee or Beehive? They had to actually have a marketing plan to take customers, SME customers from First Abu Dhabi Bank, from Emirates NBD Bank. What does that customer journey look like? You never hear anyone talk about any of this. So are we not heading into a situation where you're going to see a lot of losers? I mean, are not a lot of people going to lose money now that they're trying to get into this digital game, and they are, it's like showing up to a Formula One race with a Honda Civic. You're not going to cross the finish line, buddy. A lot of these people. Am I alone in thinking this here? You're muted. You're muted, Yuri.
Yuri, you're muted.
I don't think you're wrong in any shape or form here. I do believe that sort of the banks, whoever is pouring money in a digital transformation, need to start with people and processes, means organizational structures, means alignment, means roles, not with technology. Because everyone loves to blame technology for everything. Like, and you see so many situations, yeah, this stuff doesn't work. That's why we are not good at digital. Let's go buy a new core banking system. In 90% of cases, maybe 95% of cases, has nothing to do with technology, right? And I'll give you an example. I see banks who had chief digital officer, but this digital officer was not empowered to do anything because all the power was sitting within products. A person who sells credit cards makes all the decisions about credit cards. So you need a chief product officer. You need a person who actually is the product owner of a banking product, who thinks about digital as one of his channel enablers. So that thinking is lacking. And I think that companies who haven't adopted or understood that they need to change their internal structures, they will be the ones losing money, right? Companies who are doing both, like all three pillars of this, like people, hiring talent, etc., changing their processes, org structures, and changing tech all in once, they probably will be crossing the finishing line. Whether they're going to be first or last, that's a big question.
Zein, I don't know if you want to jump in there or you're strategically quiet.
I cannot agree more. Honestly, it's exactly as Yuri has mentioned. It all starts with people and processes, and then technology. We have seen this classic issue with all banks trying to transform, is that they think that digital transformation is about investing in technology. It is far from. Technology is an enabler. It is not the key factor for transformation. Transformation starts with people, with the organizational setup, with culture, and it has to have a tone from the top. So that's key for the success of digital transformation, in my opinion.
So is this now not shifting the leadership dynamic that we're now seeing? Because what's actually this is a byproduct of is you have a digitally illiterate CEO who doesn't understand that he doesn't have the right org structure to compete in the digital environment, or she doesn't have. And so we now are going to see the last generation of non-tech CEOs. Are we now going to see a changing of the guard where historically, and we can now see it our own, we have a chief digital officer who's becoming a CEO. Our CEO is now going to be routinely picked from the ranks of the CIO of the technology department. And is this now a death nail for that aspiring corporate banker who has his crosshair set on the corner office, now being elbowed out of the boardroom from the CIO, from the technology talent, claiming the throne? Are we now seeing an end of an epoch? Is this a completely new dynamic where we're going to have to start pulling people? You see, look at the smile on Nasser's face. He's like, that's right, we're coming for the CEO position. Is that what we're now going to see?
That's what's going on, I think.
I can tell you because we're doing searches for CIOs, and you call up a CEO and you say, hey, you have this great position, and you're like, oh, this is a shoo-in. And then all of a sudden the CEOs, the chief information officer, the chief technology officer, the tone's totally changed. They're like, Shane, I'm not going for another CIO role. I'm going for the chief executive officer role. And we're launching this new platform. In fact, our guest next week, same thing. He's been promoted to a CEO. He's a chief disruption officer, CIO of GEM, just been promoted to CEO. I don't know if I'm supposed to say this. I know I'm going to get so much trouble today. I'm laying so many cats out of the bag. All the cats are running wild in the streets of the Middle East today. So is this this is a real trend, right? This is what we're now seeing. This is in fact what we have live on our panel. I'm not making this stuff up. This is happening.
I think, Shane, this is the natural progression of things and maybe the natural evolution, but I don't think that this is a prerequisite per se, because you might have a traditional CEO, but nobody can afford even the traditional CEO, even somebody that's not necessarily digitally literate. Doesn't mean they cannot sit on that seat as long as they have the right talent with them to support the growth and to support the innovation and to support the digitization of their organizations. So I think it would naturally happen, but does it mean that all of these CEOs that have conventional banking experience are going to be elbowed out? I don't think this is particularly the case. It's more of whoever is actually leading this. As Yuri said, we have cases where we have chief digital officers that are not empowered. You have the constant friction between the business and the digital, and not understanding that these are now, they have to be married. They cannot be two separate silos under no circumstances. So if you have the right setup, if you are empowering the right people, and you have the more digital talent in places where you need them, then it doesn't mean that all the rest of the whole structure needs to be within that framework. You can still have people that think through in the traditional way to support the overall organization, but eventually we will all evolve to that, and skill sets need to change.
I want to add one thing here. I actually think in some cases, Shane, you're right. I think especially in the places where technology is becoming your key or maybe your only competitive differentiator. If you think about relationship banking, if you think about wealth management, if you think about private, I still do believe that the more traditional, like corporate and investment banking, your traditional expertise in banking is probably still very, very relevant. And I think that. But if you think about retail bank offerings, retail CEOs, if you think about this volume, where the only place you can actually compete is tech, then I think it's right. And it's maybe not happening as fast as we would want it to happen, but it will eventually happen.
Let me just quickly share a picture here for you guys, for everybody. I don't know if this is showing. These are the founders of Stripe. The company's evaluated at 95 billion. So stark contrast to your traditional bankers or what you're up against. Young, not wearing suits. I don't even think they did their hair for the picture. It's a totally dramatic. Everything we know is getting turned on its head. So huge opportunities, huge challenges as well. I think for people who get the questions right, and obviously with guidance from experts like we have on the panel today, can maybe help us be on the winning side of this equation. But there's definitely big winners and big losers on the horizon here. Nasser, I don't know, what do you think about that? You've obviously opted to go on the consulting route to take advantage of some of the upside that we're seeing here in the market.
Well, that's why I don't have my suit on today.
I know, I'm out. I'm the old school. I've just dug myself a grave here.
I was going to come in with my
Hawaiian shirt next one.
You're right on. I think, that's what's going on in this domain. We see a lot of youngsters jumping in, and they have really nice ideas in hand, as kind of like what Zein and Yuri just stated minutes ago. They have like bits and pieces from the whole equation, and those bits and pieces, big firms, they want to purchase those bits and pieces. They want to pay for them, because they cannot really build everything in-house. And as you guys know, probably we've all worked in the banking industry, and we know how basically I would say slow it is. And when we talk about regulations and what have we don't have the agility as the young, smaller, firms, to say the least. So those two youngsters, they can start a small firm and kick it off with their idea and, capitalize on it. And they don't have to build all the different, front end units, back end and middle, the middleware and all the stuff that we worry about in the banks, just to say the least. So I think, I want to add one thing to Yuri and Zein. You guys did marvelous over here on this panel, by the way. But the thing is, one thing, I would say, if we introduce an agile methodology, around the whole deal, that will really expedite things, and get things moving further. I think that's what it is. Shane, I want to hand it over to you. I know there are questions, and I know we're running out of time, so I'm going to hand it over to you.
Yeah, I think we're coming to the end of our session, and I can see that Abbas Ali, one of UAE's greatest TV and film directors, is also here. Also the director, I believe producer of Bedazzled, the TV show. So great to have a few stars, as well as the executives here. And Santiago has his picture with the tie. So thanks for supporting me, Santiago, on that. I want to have a big thank you to Yuri. Thanks for coming out. I know you're on vacation and you made a chance to join us. I really love your insights. So thank you so much for joining.
Thanks, Shane, and great. I'll even have a suit here, right? Or a jacket. So I think I'm halfway there. So no, that's
kind of, not fully.
yeah.
And a big thank you to Zein. Thank you so much for taking time out of your workday to chat with us. And congratulations on your new promotion. Not yet released. I'm not supposed to mention it, but congrats anyway. And we wish you a huge success with your neobank. It was really great.
Thank you.
Getting your perspective. Thank you.
Thank you. Thank you so much, Shane, Nasser, Pete, who I think left us, and for everyone that joined us today. Thank you so much.
And thanks, Nasser, for coming to the table, being a great co-host with us, and sharing your insights from Digital Analytica, one of the leading consultancies in digital transformation here in the region.
Thank you, Shane. Thanks, everyone. Thanks, Yuri, Zein, everyone. Shane,
Thank
thanks
you.
for the support.
Great. Thanks.
Yes, thank you. I feel better. It was cathartic. I got to get a little bit of my frustrations out, so I appreciate it. Thanks for listening.
Thank you again.
Thank you. Guys have a great day,
guys. Bye-bye.
Okay, bye for next week. We're going to have Krish Gopi, the Chief Digital Officer for GEMS Education, talking about the transformation and disruption that's happening in the education department. The guy started a company from scratch, just got a $5 billion evaluation. $5 billion. I don't know if I'm supposed to say that live. I'm going to get killed. I don't think I was supposed to say that. But it is a massive, massive success. And of course, he's also been promoted, all you digital guys becoming CEOs now. So he's going to be talking about some of the disruption and what we can expect, what the opportunities are, and where the new cash is in the education segment. Really exciting topics. And of course, hopefully we'll have, maybe we can have Zein back again if she's free. We'd love to have you. So have a great day. Make the best of your life, the rest of your life, the best of your life. I don't even know what I'm saying anymore. So I'm going to go.